Hey everybody, what's going on? It is James here with Crypto Common Sense, and I'm going to sit down today. I'm going to shoot a video. I'm going to talk about Bitcoin, I'm going to talk about markets, and talk about the fact that people are still oblivious to reality. So before I jump into the content for this video, please do me a huge favor, hit the thumbs up button, make sure to subscribe to the channel, and leave a comment. Also, check the description. There's a link down there where you can join my main trading course. You can actually learn how to trade so that you don't get caught on the wrong side of these markets like this. And also, you can join my new indicator, which actually spits out buy and sell signals, and very soon will be able to be automated. All right, so first things first, I've lost count at this point how many people have hit me up and said, hey, is it time for me to start buying Bitcoin? My answer is sure, if you don't care about catching falling knives. Nobody knows where the bottom is, guys. If somebody's telling you they know where the bottom is, like they know the exact time to buy, like when it's going straight down, they're either delusional or they're lying to you. The only way you can try to predict where a bottom is when the market starts to range sideways, or when the market reverses and starts to put in opposing structure. So for example, it ranged sideways in 2018, and that was a sign that the bottom was probably in. In March of 2020, it had a V bottom because of the Fed and the quantitative easing nonsense. But after it V bottomed, it ranged, and then up it went, and that was a sign the bottom was probably in. Right now, all we have is a move straight down. And I have to be honest, and this might sound a little bit like terse, I guess, but it is annoying to me when people ask me these questions. And the other day, somebody asked me about it, and I was a little bit gruff with them, and I didn't mean to be, but it really is obnoxious. I find it completely and utterly obnoxious when people ask me if the bottom is in. Because I've been talking about this for over a year now. Bitcoin is likely heading back to $8,000 to $12,000. That's if the stock market can recover itself. If the stock market can't recover itself anytime soon, it's entirely possible Bitcoin is going below $3,000. Those are my beliefs. Those are not facts. Those are my personal opinions. They don't change, okay? Because they're macro opinions. They're based on macro movements in the market. And so my opinion is not going to change based on a weekly movement or a daily movement. There is this chart that I posted up several months ago now, right? This is a Wyckoff distribution chart. And at the time, I thought we were either in, schematic 1 or schematic 2. I wasn't sure. I thought this was the upthrust, and then I wasn't sure if we were going to get an upthrust after distribution back to the top of this channel, or if we were going to get this last point of supply. And it was looking like we're probably going to get the last point of supply, so the schematic number 2. And so I drew this up several months back and said, this is what I think is going to happen. At the time I drew it up, it was right where this yellow line ends in February, and then I drew the red line trying to kind of demonstrate what that might look like. Well, we did get the bounce up. It didn't go quite as high as what I had hoped, up around 52K, but it did get up to around 48K or so, and just broke down. Well, look at the schematic, guys. I'm not as smart as Richard Wyckoff. Richard Wyckoff is the guy who came up with this over 100 years ago, right? This is a guy that was just a pure genius with this stuff. And he realized that this pattern repeats over and over and over again. Well, if we're following Wyckoff logic, and we're breaking down, that means we're just now entering phase what? What, phase D maybe? Right? When you take out your sign of weakness back here, we could be right here still. Maybe we're getting over to this point, but either way, if this is distribution, we have further to go. All right? The other thing you have to ask yourself is, why would the market stop dropping? What reason would the market have to suddenly just go up? And the argument that's been made to me, and it was just recently made to me on Facebook, and I'm not picking on anybody. I really want to be clear about that. It might sound like I am, but I'm not. The argument or the question that I get a lot is, is the bottom end, number one. And that's normally followed with, hey, I don't care what the price is because I'm a long-term believer and I'm just going to start racking up and stacking up. Fine. If you want to do that cost averaging stuff, that's up to you. But if your belief system is, well, this is what always happens with Bitcoin, it goes down and then goes way, way up, you may want to check that belief system against reality, because reality is Bitcoin has only existed during a bull market. I understand Bitcoin's at 80 and 90% pullbacks and 80, 90% bear markets of its own. But those bear markets have existed in a global bull market. Quantitative easing started around 2008. And we've basically been in this crazy environment for the last 14 years where markets have been allowed to run completely wild and people have had access to really cheap money. Inflation's been fairly low, right? The perfect conditions for a market to thrive. We're now entering into the exact opposite of that, the absolute worst conditions for a market to thrive, right? Historic inflation rates, for example. And so reality doesn't check out with this belief that Bitcoin's going to suddenly turn around. And I'm not saying it's impossible, because nothing's impossible. And I certainly don't want to pretend I have a crystal ball like I know for a fact what's going to happen. What I'm saying is I can't find any logical reason that Bitcoin would suddenly go back up anytime soon, or that Bitcoin would suddenly stop falling unless it's some kind of dead cat bounce, right? Which is completely possible. There's always possibility of a dead cat counter move, and then you get further downside. I am not personally interested in buying $22,000 Bitcoin in the slightest bit. All right. I still think it's going to 8,000 to 12,000 minimum. I think it's very likely it goes lower than that. That's just brass tacks. All right. So that's the Bitcoin chart. That's the Wyckoff chart. If we go take a look at the stock market, and I'm not going to spend a ton of time on this stuff because it's just kind of beating a dead horse. I just want to do the video because it's been a while since I've done one. And, the reality is a lot of people may have wondered, hey, did your opinions change? Well, they didn't. They didn't change. They're exactly the same. I had said months ago, right, that this was a double top on the RUA, which was, accounted for like 97, 98% of all U.S. stocks. I had said that when it came back up for a retest, it was a textbook pattern, that we should get something like this. You can go find these posts on social media, and then we should get more downside. And that's exactly what happened. And anybody who was able to put their bias to the side, they could have been looking for short positions right here, shorted on this candle, put the stop at the top. Technically, they would have been shorting the open over here, stop at the last high. And right now they'd be up almost 9-1. All right. I didn't short the RUA. What I did was I bought puts on the QQQ instead. So I do have bearish bets that are now working out quite nicely. Okay. I did that to try to hedge against some of the investments that I was holding on to. And so that way, I lose money in those investments, but I make money on the puts. If I was wrong, then I would lose money in the puts, but I'd make money in the investments. So I was kind of in a hedged scenario. But this is the whole stock market, right? For the most part, the whole U.S. stock market. You look at the individual stock markets indexes like the QQQ, which is an ETF for tech stocks, and it's terrible. Absolutely terrible. From the top right now, it's dropped about 32%. 20% is considered a bear market, so it's in the bear market territory. It gapped down, not just today, but on the week, right? It's got a weekly gap sitting there. Probably worth keeping in mind that it's well below its 200-day moving average. Probably also worth keeping in mind that the 200-week moving average, right, was lost today. Price fell under the 200-week moving average on the QQQ. If you look, that's where it stopped in March of 2020, and that was a good buying zone here in 2015. It was a good buying zone here in 2010, but other than that, well, this is a QQQ. We can look at the NDX. It'll have more history. Other than that, it's not really supposed to be an area that gets touched. In a bull market, it gets touched and rockets off. Once it starts breaking below it, that's where you start talking about major bear markets, such as the dot-com bubble. And for those of you that haven't seen my past videos where I've talked about this, the dot-com bubble fell over 83%. So if tech stocks fall 83%, I don't see a logical reason that Bitcoin would go back up anytime soon. An 83% drop in the tech market would put it down around this level down here, right? Somewhere in this ballpark if it was to repeat the dot-com bubble. See that? You're talking about prices that we were looking at in 1999. Really, really big trouble if the stock market does that. And of course, one of the ways the Fed stops the stock market from tumbling is by, injecting liquidity into the market and lowering interest rates, which they can't do because they've already did that. They, got premature and jumped the gun in March of 2020, lowered those interest rates and sent inflation skyrocketing. And now they can't lower them again because inflation's already out of control. So they've got, a huge problem where they're between a rock and a hard place, because in order to get that inflation under control, they've got to raise interest rates. The raising interest rates causes the stock market to crash. Right? Snowball effect. And so at this point, the only scenario that I see is they're going to have to let this thing play out, and it's going to be very harmful, and it's going to hurt a lot of people, and a lot of people are going to lose a lot of money. And people, in my opinion, people who are trying to catch falling knives are going to end up walking away with no fingers left, right? They're going to be absolutely just sliced to bits because, as somebody said to me earlier on Facebook, well, it's on sale. No, it's not. It's not on sale. It's overpriced, right? If I have a car that's worth $10,000 and it temporarily goes up to $15,000 in value, when it falls back to 13, it doesn't mean it's on sale. It's still overpriced. It was a $10,000 car a few years ago, okay? And that's what we're looking at now, is we have these people who think things are on sale, so they're running out there to buy them, and that's causing a little bit of, pauses, like this pause back here. But then the reality is they're not on sale, and you still have big institutional money dumping on the market, trying to get out of their positions, just moving it down lower, lower, lower. All right, so the tech market looks terrible. The whole market looks terrible. Crypto looks terrible. Bitcoin looks terrible, right? These are all, moving together. And every once in a while, I still get somebody who apparently lives in outer space and tries to tell me that Bitcoin is not correlated and that Bitcoin is a store of value and all these bullshit things that aren't true, right? And listen, you can't even make the argument anymore. You can't. You can't make that argument with a straight face if you know anything about markets at all. All right. You can actually take an indicator called the correlation coefficient. It's a free indicator over on TradingView. You can put Bitcoin on there, and then you can put the QQQ on there, and it will tell you how correlated those two markets are. Correlated, again, means they move together, right? A 1 would be total correlation. A -1 would be negative correlation. And you can see that Bitcoin has a 0.94 correlation to the QQQ, right? It moves with tech stocks. That's what it does. It's not a store of value. It's just another tech asset. Okay? That's what it is. And it's fine. It's fine that it's a tech asset. It just means that you can trade it like a tech asset. You can treat it like a tech asset. You can make a lot of money if you make the right moves. But it also means that if you fall in love with it and think it's, the great hope to replace the dollar or whatever, that you're probably going to lose a lot of money, right? Look at this weekly chart on Bitcoin over on Coinbase. There's nothing magical about this. There's not even anything secretive about it. You had a range. This was the bottom of the range, right? Oftentimes what I do with students is I draw these boxes. We call them demand boxes. They look like this. Okay? So you get something like this, right? Falls below it. It's kind of fussing around inside of it, and boom, demand falls. There's not enough demand to push it back up, so now it becomes supply. Boom, sends the market lower. And now what will happen in most cases is you'll move away from that demand, now flip supply. Eventually you'll come back up to it, and newer people will FOMO in thinking, oh, the bottom is in, we're going back up. But other people will be waiting to sell or short. Some people who are just traders looking to take advantage of a market move. Some people who thought it was going to hold and it didn't, and now they're terrified and they're trying to get out while they can. Whatever the case is, if there's enough supply left, when we retest that level, it will send the market even lower. Okay, that's how that works. And by the way, if you go back to the Wyckoff chart, that's why it looks like this. That's what's happening, is you have what used to be demand flipping to supply. All right. So again, not saying there can't be bounces, not saying there can't be counter moves back up. What I am saying is that once a market shifts gears from fear to greed, like it did back here, it takes a lot to break that momentum and shift it back from greed to fear. And once it shifts to fear, like it did through here, it takes a lot to move that needle from fear back over to the greed side, right? It's very, very bipolar, the market is. It's usually either full-on greed or it's full-on fear, right? When it's in between is when you get your ranges, like back through here. But once that needle gets flipped, it's very hard to flip it back the other way. And right now we certainly are in that fear cycle. If we take a look at an update on my market cycle chart that I started posting about late in 2021, we can see that this is Bitcoin versus the QQQ, right? I mapped all this out with the Wall Street cheat sheet and showing how this move in October/November was actually a complacency bounce. Of course, there's those haters out there who try to say, oh, you can't do that. It actually went higher in November. And of course, I had to walk them through, like, they'll, take their little hand and walk them through baby steps and say, this is a relative strength chart. It's measuring Bitcoin versus the QQQ, right? Lay all that out for them. And that's what it was. Complacency moved down. We get our anxiety move, right? We got a little bounce down here, and we're probably somewhere around denial. We may be moving away from denial now. We may be down, moving toward panic, right? I literally had a phone call with a friend, and I don't mean disrespect to him, but one of the things that came out of his mouth was, I'm down XYZ dollars, but I'm not worried about it because my investments are with strong companies. Do you see what denial is? My investments are with great companies. They will come back. People don't change. Fear and greed, fear and greed, fear and greed, right? So this is, unfortunately today it's down to 81.35, which is below this midpoint back here. That's a very bad sign. That's more sign this is probably going much lower. Again, I think this is going back down to these levels, which are these levels back here. If the QQQ is the same price, when this happens as it was back here, then that would put Bitcoin down between 8 and 12K. But if the QQQ is actually cheaper and Bitcoin is cheaper versus the QQQ, it means it's probably below 8K. And I think that's where we start talking about under $3,000 Bitcoin again. All right. And there'll be some people who say, oh, you're just, you're going over the top because everything's so bad and you're overly bearish. No, these calls are not new. And some of you are new to the channel, so you don't know this. But I'll just tell you, this chart was posted in November/December of last year. These targets that I'm talking about are the same targets that I've been talking about for the last year. These are not targets that are emotional responses to the market moving down. These are targets that I've always talked about, right? Even as far back as the summer of 2021. When I said that, hey, I think we're in Wyckoff distribution, I was saying $8,000 to $12,000 Bitcoin, $8,000 to $12,000 Bitcoin over and over again, right? These are the same targets that I've always been looking for. It's just now with the stock market also doing so poorly, I think it's entirely possible that it doesn't stop there and it goes lower and starts retesting 2018 levels and maybe even lower than that, all right? So for all of you asking me, do you want to buy Bitcoin here? Again, I will leave you with this. That is your decision. Cost averaging over the last 10 or 12 years on Bitcoin has proven effective. However, it's proven effective in a global bull market. Nobody knows whether cost averaging will work out in the future or not. Nobody knows if Bitcoin will ever go back up. A lot of people have this complacent view that Bitcoin has to go back up because it's always went back up in the past. That is a fallacy. Bitcoin certainly can go back up eventually, and it might go up eventually, but it is not a guarantee in any way, shape, or form. One thing about this cycle versus last cycles is in previous cycles, people tried to cling to the idea that Bitcoin was a store of value, and because the stock market was always going up, it was never really disproven per se. It was just unlikely. Well, at this point, it has been disproven. You can't call Bitcoin a store of value when it's crashing horrifically versus the stock market, right? There is no narrative left. Bitcoin is not money. We all know that Bitcoin can't work as money. It's not efficient enough to work as money. So that's when the store of value narrative came into play. Well, no, it's not going to replace money like a Visa or a MasterCard. It's going to be like our digital gold, a store of value, except it's not. It's not store of value. It's terrible store of value. It's too volatile right now to be a store of value, and it's completely falling apart in the face of what's going on. I have the hiccups. I apologize. But yeah, it's just overall, it sucks. It sucks for people losing money. It sucks for people that were innocent victims of this. I say innocent victims, people who were just trying to invest, maybe make a few dollars. I have no sympathy whatsoever for permabulls who are obnoxious permabulls, who just refuse to listen, right? Those people, they deserve whatever they get. But for people that just simply didn't know any better, or people that were following the permabulls, not knowing any better, I legitimately have a lot of sympathy for them, and I hate the fact that they're losing a lot of money right now. I've had a lot of people come to me recently telling me, I've been destroyed over this market the last 6 to 12 months, and it sucks. There's no way to put it. It just sucks seeing people get hurt by this, especially in a time when everything else is going so bad with cost of living and everything else. So if you did lose a lot of money over the last 6 to 12 months, what I would tell you is you really need to invest in your education. Some people say, well, it doesn't make sense to invest in my education. I just lost money. Well, that's when it makes the most sense, right? When I got really serious about trading and I turned the corner was after I lost a whole bunch of money in the early part of the 2018 bear market. And it was the best decision that I made as far as financial decisions goes, right? So you need to invest in your education, whether it's time, where you're just trying to do your best to look through all the free content out there, whatever it is, whether it's money, where you're buying a course or training from somebody, or whether it's, software, whatever it is. I would encourage you, and I have software and training, so, full disclosure, I would encourage you not just to buy software, but also to learn how to trade so that you understand everything that's going on. Again, I have software, so if people want to buy software, the software will give out buy signals and it will give out sell signals. And I think people can still be very successful with those, but yeah, also I think it's always important to have an education and understand, at least a little bit about why the software says buy and why the software says sell. I think that's kind of a big deal as well. So again, there will be a link for that stuff down in the description. This is not a sales video. This is just a market update, but I do want to make those available to everybody. And other than that, the other thing I would say is, sometimes it's okay to take your ball and go home. You don't always have to play the game. If you're not comfortable trading in a bear market, if you're not comfortable with what's going on, there's nothing that says you have to be involved at all. You could take 3 months, 6 months, 9 months, 12 months, 18 months, whatever it is. You can just sit back and wait for the market to put in some kind of range and then eventually start moving back up. Because one thing about markets that we can say for sure is they ebb and flow, right? They go from cycle to cycle. So while this is very bearish right now, and while I'm expecting a lot more downside in the future, I also know that this market is not any different from any other market, and that eventually there will be a bottom, and eventually it's very likely that all of these markets will start to move back up. I say all the markets, I'm not talking about one individual asset like Bitcoin, for example. I'm saying the markets as a whole. The stock markets, there will be some stocks that are big losers. There will be other stocks that rise from the ashes, just like the Amazons of the .com bubble. With crypto, I'm sure there will be a lot of losers, a lot of coins that might go to zero or near zero and never come back. But I'm also sure there'll probably be some coins that end up being really big deals in the future. Maybe old coins, maybe new coins, maybe coins that don't exist yet, right? It's impossible to say, but I have no doubt that there will be more opportunity and there will be nice, fun bull markets at some point in the future. It may be 6 months from now, it may be 5 years from now, it may be 20 years from now. Nobody knows that, right? I would say if I had to guess, it's probably going to be 18 to 24 months, but that's literally a guess right now. We'll have to see how fast things play out over the next few months and what effect, different things have. It may be 6 months from now that things start to settle down and we can start talking about bottoms. We just don't know. So all that being said, I hope you enjoyed the video. I know you haven't heard a lot from me. It's because I'm just doing my thing, right? I mean, I've kind of moved away from doing a lot of free content. It's time consuming and it just didn't feel like people appreciated it that much. Most of the people that comment on my videos, most people that like my videos and subscribe to the channel, most of those people are already paying students to begin with. So it's kind of like, why not just spend all my time and energy with them? And that's what I've been doing. And, not surprisingly, that's allowed me to have time to do other things like develop the software that gives out these signals and stuff, right? When I'm not spending all my time doing videos and editing videos, imagine this, I have time to code. So all that being said, please remember, I'm still just some guy sitting in a spare bedroom, which means that nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, forex, or any other tradable assets. Also, please remember to trade safe, because our job as a trader, more than anything else, is to make sure that we're still here to trade tomorrow. Check the description for links where you can join my trading course as well as join my software. Make sure to give the video a thumbs up. Make sure to leave a comment. This is James with Crypto Common Sense, and I'll see you in the next video.